Welcome to Trading Lounge and the SP 500 for the 26th of June, and starting on the daily chart here, we've been looking at this as a up for 5 waves for wave 1, as you know, and then an A wave, a B wave and a C wave here for wave 2, and then pushing up here higher. So we're in this particular space here, and let's take a closer look at that. So in this instance, we're looking at, wave A here in 5 waves, then an A wave, a B wave, and a C wave here for wave B. And remember, on the cash market, this was the actual high above these other 2 highs here. And then we've been counting 5 waves down for wave 1, and we're looking back for wave 2, and then we're looking down for wave 3, 4, and 5. Now, there is another little problem that we've got with this situation, unfortunately. So I'm going to put that on the 2-hour chart. And this here has a different corrective pattern with a more extended wave B here. So 5 waves down for wave A, because, you know, the thing with the guideline of alternation is that you can have the one wave simple, the next wave complex and simple, or you can have simple, complex and more complex. So this is a real possibility here that we need to flush out, in that we're expecting a move to come up to this point and then fail from there, and that's still on the cards, and we need to look at that. But at the same time, we need to also now look for 5 waves to take us back up to these highs again through here, and then down from that point. A little bit unfortunate. So we're going to be looking, our focus is obviously in this area here, and we're going to look at both counts. So one count taking us up here and one count taking us to here in this instance. So unfortunately, you know, I thought they would just get away with, you know, down for wave 1 here, back for wave 2 here, and down for wave 3. And I still kind of like that, because when I look at the Nasdaq, if you don't mind here for a moment, sorry to throw your mind around, that this whole move up here doesn't count very nicely as an impulse wave. I know we can get 5 waves here, and then an A wave here, an A and a B and a C for here for B, and down for C here. So we can have an A, B, C here for this, for a B wave in top here, and then we have 5 waves down here. So we'll be going, we need to go through the same with this as well. So for this to go up to here again, it just doesn't make sense to me. We'll see, but we'll just keep an eye on the Nasdaq as well here, and see what comes of this. But the other point with this too that really bothers me is that we're looking at an expanded flat of an intermediate degree, you know, taking out the top here as a correction, B wave, and then taking out the low here as a correction, as an expanded flat, or maybe even a running flat. But, you know, you just don't get that at this degree of structure within this. So something's not quite right here for this either. But my main focus is, I know that we've got an impulse wave down here, so we need to focus on this particular rally here to see if we can get any clues to see where we are with the S&P, because we know the tech stocks are doing well in the COVID situation, and obviously will continue to do well and will continue to lead the market to the upside. So we need to be mindful. Now, so for this here, well, we just need to go in and have a closer look at both of these counts. So this count here, let's just go in and do this one while we're here. So this move up here would be looking from wave B here to wave C here, and would be looking for 5 waves in this instance here. So we'll just bring this into the 15-minute chart here. Now, first of all, we were looking to be short yesterday, and we're going to take profit down here. We didn't quite get to this level here, so hopefully that you've taken money off the table somewhere down here. So this particular case here would have the count look like this here, in terms of the difference is counting this as wave 1 or wave A. So in this case we've got wave 1 here, wave 2 here, and then we've got wave 1 and 2 here, and then we've got the third wave up here. So the third wave is simply 1, 2, 3. That's already pulled back for 4 and going up for 5 for the third wave here. Then the fourth and the fifth wave here of the third. So all of this being the third wave up through here, and then the fourth and then the fifth wave coming up. So we're expecting it to come here, but it could come up here and catch us out. So excuse me, at least we know that, we'll be looking to short here, but we just need to be a little bit more cautious now in that area. Okay, so a lot of focus will be in on this, and we'll need to talk about that there again as well. So the other count, I might just go to the tick chart. What have I got on the hourly chart here first? So this is the count that we've been looking at. So we know we've got 5 waves down to here, and we could look at this instead of wave 1 here. We could look at it as an A wave here, a B wave here, and then 5 waves up here, taking us to the 61.8%. So we're going to go in and have a look at that. I'm going to go to the tick chart to do that. So with the tick chart here, I just need to bring in a bit more data. So first of all, we counted down here nicely with the 1, 2, 3, 4, 5 for 1 and 2 and 3 here, and ABC for the fourth here, and then 1 and 2 and 3 and 4 and 5. It all finished off really quite nicely. Just didn't quite get to our target down here. So hopefully, I'm sure everybody would have, gotten out in due course with all of this. So the count to the upside here can be really quite simple in terms of nice impulse wave here for wave A, an ABC here for the B wave, and then 1 here, little ABC here for the wave 2, then 1 and 2 here, and then the third wave to here, the fourth wave to here, and the fifth wave moving up into this space here for this. And then we'll have, not much after that, we'll have wave 4 here. So that will finish off up here somewhere. It may reach up here, we'll see, but doesn't matter if it does or doesn't. So then we've got this situation here where we're nearly finished here. So we've got 1 and 2 here, and then the third wave here of 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave and fifth wave. So we may end up here, at 3,110 probably, somewhere in between these two here for this move. Now, I guess if that, a couple of things here that's kind of important for us is that the 3,100 is pretty close to the 61.8% at the top here. So we could say that if we've got a really solid support, a classic trading levels pattern sitting on top of the 3,100 area there. So the classic trading pattern looks like this. So the arrival at 3,100, the reaction, the first high above the level, and then the correction, and then this here. So we're either going to get this, or when it gets to this one here, we'll see this is an A and a B and a C wave here, and then goes back. So we'll put our order to go short under here, under these 3 waves coming down. Because if it goes back and tests and then fails at that point, then 3 waves makes it corrective. But anything beyond 3 waves would make it bearish at that point. So if we can just draw that out on the chart here, I can't draw on this side with the tick chart, I can only draw on this side. So what we're looking for here is we're looking up for wave 3, then we'll look back for wave 4 here, the reaction. So that's the arrival, the reaction. And then the first high above the level we'll see in 5 waves. Okay, now I'm not sure where it will come to, but that just takes a lot more work. But then the market would come down and have 3 waves here. Now, after 3 waves, then the market can push up from that point and continue going up. But this is where we'll need to put the order to go short, because if it reacts from that point and comes down further and goes past the ABC correction here, then you'll know that we're shorting here. But otherwise, we need to be going long here for this, on this level here. So really, we're just using the 3,100 as support or resistance and the opportunity to get back into the next trade. So we need to have a look at this pattern too in bullish terms, in terms of what structure will be where at that particular point. So it's kind of going to be the same really, and there's not a lot in this per se. So if I can clean some of this up here just for a moment, I think it's just worth spending a little bit of time on, so we've got a reasonably clear understanding of what's what with this here. So I just want to draw this out in a bit more detail here. And the other point too is, Thursday being bearish and Friday being bullish, in our bullish weekly cycle. So from here, we'd be looking at wave 1 and 2 here, and 3 coming up to here. So it's not, that's 1, 2, 3 here. I just need to check on that. Anyway, one way or another, we'll see this move up to here. And then we'll see a reaction from this level that could come back to group 2 here, 65, 72 and 80. May not come all the way back, may just come to 90 or whatever, but 80 or 90. And then we're going to see five waves up above the level here. So we're going to see the same thing as the corrective rally as this one. And then we're going to see an A wave and a B wave and a C wave here. Now the thing is here is that this wave 4 here and this wave 4 here will be roughly the same here. So that will be quite good. So any move beyond that to the downside, and then that will move up from that point, and we need to be long at that point, right? And then we also need to be short below this one here, because any move beyond that one here would bring us, will bring us right down through this point here. So this is where we can build in. We build in here, and then we can also build in below group 2 here, and we can also build in down here as well at the midpoint here, becoming the resistance. There will be another bounce coming off this space down here, off the near the 3,000 or off the 3,000. So you just need to don't go shorting it just here until it's matured. It's like normally it's like a ball bouncing on the ground. The first one comes the highest, the second one comes like this, and I'm probably exaggerating it a bit, but you got my message here, so to speak. But in this first bounce here, it will be like the first high here, then the second, and then so there'll be 3 waves in there. So just be mindful of that too, and the same in here as well. Yeah, anyway, just the details, but it's all in the details. So look, that's really where we are. So we're going to recap this a little bit. So on the little bit bigger picture here, there's this particular count here that's valid, and I just needed to make you aware of it, that we could have 5 waves moving up to the old highs here for wave C of B. We're still bearish because we've got 5 waves here. That's the main point. So the problem is I don't know if we're going to be going just to here and down, and then when we're talking down here, we're talking 1, 2, 3, 4 and 5 here. So that's what we're looking at here. So I don't know if we're going to fail here or we're going to fail after 5 waves up to the top here. That's the problem. I think that there's a good case for both of them, really. I mean, the Nasdaq is sort of telling me that we should terminate in this space here and then move down. But the Nasdaq is doing a really weird count. I don't have control of the count. It's just, I mean, I can count the waves, but, this counts 5 waves up here. This can't be 3 waves here. I mean, this can't be wave 3 here and wave 4 here and wave 5 here. That's just not gonna fit, So there's some problem, there, with that. Maybe, yeah, anyway, we're just going to keep an eye on it. I've got to get my head around it. I haven't solved that problem just yet. But anyway, all in all, I think we've done quite well. We've made a bit of pocket money in the short trade here. We got the turn. Unfortunately, I didn't get the turn back up here, being in Australia and giving signals out, in my midnight hours is difficult. So, but anyway, let's see how we go from this point. It's looking quite strong at this point. And just going back to the bearish count on the tick chart here. So we'll just see how this is going while we're here. So this is coming up into wave 5 here nicely. So that will give us that wave 3 there, then wave 4 and wave 5. So it'd be interesting to see how this plays out here. This should come back to the wave 4 of 1 lesser degree, but the other way to look at this too is to obviously grab the low here of wave 2 and come up to wherever that high is here, and then that will give you your 38.2% retracement level. So may not be, if it's going to be weak, it will probably come back to that. If it's going to be really bullish, it won't come back to that. It will be higher and sit on the 80. So those little things can be sort of helpful. But yeah, to see this finish off as an A and a B wave and 1 and 2 here, and 1 and 2 and 3 and 4 and 5 for the third wave here, and 4th and 5th, and then down. So I guess another way to look at this too here would be that on a bearish scenario, anything that come this group 2 here, that when I talk about 3,100, that's a minor level, and then we've got group 1 above and group 2 below here. So this group 1, its job is to hold the market to this number, unless this top here, the top of group 1, the 30 here, becomes support. If that becomes the support, then you know that the market has left this number and is going higher. And that's the same to the downside here. If the market comes down here and finds this area here, and especially the 72, as the resistance, the retested resistance, then you can start building in short trades on those resistances coming down through here. There'll be a bounce off the 30, of course, back to the 40 or 50 maybe, and then down again from that point. But yeah, if this group 2 becomes the resistance, that's another way to look at it. If you can't work out the wave count, then this area here, especially the 72 as the resistance, will be helpful for you in bringing this to the downside here further. All right, I'll leave it at that. Thanks for tuning in. Cheers.